What is going on, you guys? Welcome back to the channel. Economic Prepper here. Hope you guys are doing very well. Hope you guys are staying safe out there. I really appreciate the support that I've been getting from you guys over the last several weeks. I really appreciate that. Glad you guys are liking the videos. Glad you guys are liking the videos. Really appreciate that. I cannot thank you enough for that. It's really cool. Also, if you're new to the channel, please consider subscribing to the channel. We've seen record prices everywhere, gas prices, diesel prices, and I feel like I'm in the grocery store more lately. I guess it's kind of a good thing because I get to hang out with my wife more, and I love time together with her. Anyway, so we're looking at the price of chicken. Oh, by the way, I'm drinking my green drink here, trying to stay healthy. Gotta stay healthy, you guys, especially in this current environment. You know, we're still getting through this pandemic here, plandemic, and you know, with the increased cases of this new pox thing going on here, who knows where they want to end up driving that thing. All I know is I keep seeing the numbers going higher and higher. But this is a green drink, and I try to remain healthy because you don't want to get behind on your health, especially in the current environment that we're in. Healthcare is very expensive, and you know, with shortages and inflation running rampant, all you need is some unexpected healthcare bill to really knock you out financially. We don't need that. So I've got some spirulina, a little bit of chlorella in here, and some branched chain amino acids, and I like to have this each and every single day. Keep the immune system up. I do want to apologize because I want to show you something. I want to apologize because I sound like crap right now. And the reason why is because I just tested positive for this crap here. So I just took both of these tests day before yesterday, and I'll be honest with you, day one which was the day before I actually took it, I was feeling very lethargic, very tired, very lazy, hard to focus on anything. I don't feel that way today. So this is like day 3, I think, right? Yesterday was more like, runny nose. No, yesterday was a little bit of, it was more coughing than anything else. Wasn't feeling lazy. And I had a runny nose a little bit, but more coughing, a little bit of runny nose. Today, less coughing, more runny nose. Anyway, I just wanted to apologize because, you know, excessive coughing, you'll probably hear some of that throughout this video. So sorry about that. And I'm having my green drink to help me battle this as I get through this. So I was really surprised to see how expensive some of these items have become. And I think it's more apparent to me because I don't go in the grocery store every single day. So it's kind of like I see a snapshot today, but the last time I saw a snapshot might have been a month ago because I don't go all the time. So the changes are more drastic to me versus someone who might go into a grocery store maybe every other day or once a week. Anyway, I'm not saying that all chicken costs this much, but I happened to look at some of the prices for chicken, and I saw some chicken in there for as high as $11 a pound for chicken. Now, this was organic, grass-fed, or something, whatever, chicken, and just blew my mind how expensive some foods have gotten over the past year. Anyway, eggs are higher. In fact, I was in Sam's Club with my wife, and we normally get this big box of eggs, and that wasn't even available. Like the last time I was in there, we saw them at $53 for this big box of eggs, which I don't even know how much comes in it, but it's the biggest box that they offer. If you guys know, when you walk in the freezer section, every Sam's Club I've ever gone to is excuse me, when you go in the freezer section, they're on the left. Well, last time I went in there, they weren't even available. So they had been going up in price. In fact, you used to be able to get these eggs for like $19 a box. Maybe even sometimes you might find them as low as $16 a box. They were $53 last time I saw them. Now they're not even available. They're completely out of stock. So, all right, so let's talk about some of the big changes that happened yesterday. All right, so the truth comes out. The truth has finally come out, and the Federal Reserve is actually taking some massive steps. And this tells me what's really going on, because they're not going to let us know what's really going on, right? They're going to let us know, oh, nothing to worry about. Don't worry about these gas prices hitting $4, $5, $6 a gallon across the country. Don't worry about the fact that California gas is $9 a gallon out there being reported by a number of you guys in the comments. Don't worry about the fact that CEO of JP Morgan Chase, Jamie Dimon's claiming or expecting for oil prices to go up as high as $150, $175 a barrel. Now keep in mind, we're at $122, $125 a barrel right now. So just imagine adding another 30 to 40% onto your current price per gallon. Californians could see $12, $13, $14 a gallon by the time we hit those predicted price per barrel expectations according to Jamie Dimon. But just yesterday, breaking news had come out. Federal Reserve raises interest rates by 0.75%. This is the biggest rate increase that we've seen since 1994 amid efforts to slow inflation, guys. So let's just take this into perspective. So we had what? The Fed raised interest rates for the first time in many years in March. It's 0.25%. Then they evaluated data and they saw, oh crap, things were worse than we thought. So the next meeting, they went ahead and raised interest rates by 0.5%. So that is a total of 75 basis points, 25 initial basis points, and then the 50 basis points that followed subsequently. Now, if you guys are paying attention, you guys are noticing interest rates on mortgages, interest rates on your credit cards. These are some of the financial instruments that are going to be affected across the board. Now, just with the 75 basis point increase between the 25 basis point increase and the 50 basis point increase between March and April, we saw interest rates on mortgages. Keep this in mind, guys. A lot of you guys are looking at buying new houses, maybe you're renting. This is going to affect everyone, okay? Those two rate hikes alone caused mortgage rates to go from, we basically saw as low as, let's just call it 3%, on up to as high as, just yesterday I saw mortgage rates as high as 6.28%. Mortgage rates have doubled, okay? We've only seen, we're up to 3 rate hikes, right? But the rate hike that I'm about to talk to you guys about right now only happened just yesterday. The 2 rate hikes that we've already seen have brought our mortgage rate up to 6.28%. So mortgage rates have doubled. Could we possibly see 9% interest rates with this new 75 basis point hike that we just had yesterday? Because remember, March, 25 basis points. April or May, it was 50 basis points. Just yesterday, 75 basis points. So we have a total of 25, 50, and 75. That is 150 basis points. Are we approaching, are we going to, is it realistic to expect to see mortgage rates? I mean, if 75 basis points added 3 percentage points to our mortgage rates, we went from 3 to 6, right? If they add another 75 basis points, are we going to be at 9% mortgage rates, adding another 3%? Only time will tell. But I will say this. Reports are coming out that mortgage applications are declining. Okay? This is a precursor to showing weaker demand in the market. Now, in my local area, homes are still selling very rapidly. I mean, I just for my own entertainment, I always look at homes in the market, look at Zillow and Realtor.com, because I like to know about my local market. I like to see what's happening around me. And I'm seeing homes listed for sale, and they're still selling within, they're still going under contract for sale within a week, couple days. So the market seems to be still pretty strong in my local area. I don't know how the market is in your local area. you guys could certainly comment down below. I'd love to hear from you guys. Oh, and by the way, if you have any, a little off topic, if you have any tips or recommendations for coping with this pandemic and trying to get well and just dealing with symptoms, let me know what your remedies are down in the comments down below. I'd love to hear from you guys. So, but yeah, like I said, in my local area, homes are still moving quickly, but not everyone's real estate situation is going to be the same. Real estate behavior, real estate transactions, the strength of real estate demand, it's going to vary from location to location, city to city, county to county, state to state. It says here, Federal Reserve raises interest rates by 0.75%, which is the most since 1994 amid slow inflation. The Federal Reserve on Wednesday raised interest rates by 0.75%, which happens to be the largest move it has made in a single meeting since 1994. The central bank messaged that further interest rate hikes will come this year. So they're not done, guys. A lot more coming down the pipeline as the Fed leans on higher borrowing costs to help dampen the demand and work to slow faster than expected inflation. Quote, they said, overall economic activity appears to have picked up after edging down in the first quarter. This is what was said in the statement. The policy setting Federal Open Market Committee, this is what they're indicating, repeating its commitment to ongoing increases. A lot more is coming down the pipeline, you guys. Earlier this year, Fed Chair Jerome Powell came out, I think it was somewhere around January, February. Fed Chair Jerome Powell came out and basically said that they anticipated to make around 5 to 7 interest rate increases just in 2022, and more would follow in 2023. We've only seen 3 so far. And those 3 interest rate, those 2, really, because the third one just happened yesterday, so we haven't even seen the effects of that. So the 2 interest rate hikes that we've seen alone have already made a massive impact. Report came out, said that a shallow recession is on the way. Strategists warn, here's how it could play out. And I think this is really interesting because initially, many of these economists and strategists were saying, oh, we do anticipate that the Feds are going to raise interest rates, but they were saying that they didn't anticipate that the interest rate hikes that the Fed would implement would have any impact to the extent that we would ever face a recession, even at any point in time during the year 2022. All of the economists were basically saying, every economist that I found said that if we even had a recession, we wouldn't see it until 2023. So here we are, 2022 still, summer of 2022, mind you. And I think we're going to get more predictions of an economic recession before this year ends. I think they're going to come out of the woodwork and basically start, swallowing their words and admitting that things are a lot worse than they thought. Got to prepare, you guys. We have to prepare. It says here, a shallow recession in the U.S. is a virtual certainty in the third quarter, according to destination wealth management firms Michael Yoshikami, I can't pronounce his last name, as the Federal Reserve launched a historic attack on inflation. See, here's the thing. The Fed controls our money. A lot of people think, oh, the president should do this, the president should do that. The president doesn't have any control over the Fed. The Fed is doing their own thing. The president, he can't control the Fed. The Fed's going to make their decisions. He can make recommendations, but the call is theirs. And the Fed is changing course. And when the Fed is changing course and they're being more aggressive with the actions that they're taking to fight inflation, that tells us that this problem is way bigger than they thought it was. Okay? Chairman Jerome Powell also signaled the Federal Open Market Committee's intent to continue its aggressive path of monetary policy tightening in order to rein in inflation after the U.S. Consumer Price Index jumped by an annual 8.6% in May, which is the hottest inflation print since 1981. So that tells us that this tells the Fed that the interest rate increases that the Fed has made up to this point haven't put a dent in the inflation, and inflation is still running ahead. It's not even like, okay, we've tapered off and we've leveled out in terms of inflation. No, inflation's still going ahead and picking up steam in the face of these interest rate hikes. So it says here, quote, the problem we're going to have here is that they're going to tip the economy into a recession when the consumer is already starting to pull back. Quote, housing market in the U.S. is really locked up with mortgage rates close to 6% right now. Close to 6%, it's over 6% now. And I think it's a virtual certainty that we're going to go into a recession next quarter. So now we're getting predictions that we may see a recession next quarter. So we are in, depends on if you're looking at, fiscal quarters, if you're looking at, just an annual, the quarter, like, okay, this is technically June, so this would technically be third quarter. So if they're saying, if we're in the third quarter now, and they're saying we could go into a recession by the next quarter, that would mean the next quarter would start January, February, June, July, August, September. Let's see, January, February, March, April, May, June. Okay, so technically June, we're still in the second quarter. Third quarter would start July, because you got July, August, September. That's quarter three. And then you've got October, November, December. That's quarter four. So technically, based on what he's saying, we could possibly be in a recession starting next month. That's scary. Goes on to say that there is a belief that if we raise enough, let's just say we raise by 75 basis points, which they did, and we raise another 75 basis points, then if there is a problem in the economy, it will be a shallower recession, which I suspect it would be in the third quarter. The Fed actually has some room now to come. The Fed actually has some room now to come back off of some of those rate increases. So this is what they're saying. So they're saying we could possibly be in a recession starting next month. And they're saying that this 75 basis point hike that we just saw yesterday could be followed by another 75 basis point hike. This wasn't even on the table. This wasn't even in the cards at the beginning of the year. Heck, this wasn't really even in the cards in the past couple of months. So this is very scary. And now they're talking about a potential global recession, not just the United States, but a global recession. Goes on to say here, there's also the potential for a U.S. recession to spread throughout the world. Andrea DeCenso, Vice President and Alpha Strategies Portfolio Manager at Loomis Sales, now puts the chance of a global recession around 75%. So we have a greater chance of going into a recession than we have not going into a recession now. This is a completely different rhetoric now. However, she added that, quote, the Fed's actions yesterday, as well as other coordinated central bank action, has led us to think that perhaps the global recession is likely to be shallow and potentially already priced into some assets. Well, I'm going to be honest with you guys. I don't think it's at all priced into some assets. I'm going to go to CNBC right now, CNBC.com, and I can tell you that with the Dow Jones being down 712 points, the Dow is down 712 points, S&P 500's down 113 points, which is a 3% drop. This is a 3% crash just in one day. The Dow Jones, sitting at 29,956 points, is now, it has breached the 30,000, the Dow 30,000 mark for the first time, and I can't remember the last time it breached that mark. So this is from a technical analysis standpoint for traders, for investors in the market, for big hedge funds and pension fund managers. This is a critical point and a critical psychological point to see the Dow below 30,000. So, and this is going to also, you gotta remember, the stock market has such an impact on everyone, because even if you're not invested in the stock market, you are still impacted. Your manager, if you work for a company, your manager likely has money invested in the stock market. They have investments in the stock market. The company you work for has investments in the stock market. And a lot of companies have pension funds invested in the stock market. A lot of companies holding a lot of cash tend to invest that money to offset inflation, right? So we've had record high inflation. So a lot of companies, large corporations, billion-dollar corporations, even mom and pop corporations have taken a lot of this excess cash, and instead of just sitting around like, well, I don't want to just sitting in this bank account not earning any money, a lot of these businesses, they're putting this money into the stock market. They're like, hey, stock market's been running up, 10, 12, 15%, depends on where you're invested over the last couple of years. Let's not let this money lose money and erode away through within our inflationary environment. Let's put this money in the stock market. So why does this affect those who are not invested in the stock market? Well, what do you think is going to happen when the companies you work for have put tremendous amounts of their capital into the stock market, only to see stock market crash 20 to 30%? So let's just take a hypothetical example, right? Let's just say you work for some corporation, even a mom and pop company, right? They put $1 million in there. That $1 million turned into $700,000. They lost on paper $300,000. Now, technically, you haven't lost money until you sell, right? But psychologically, these companies are going to start getting scared. Now, let's just take it up a step, right? Let's say you work for a little bit bigger company. They have a little bit more assets. They said, hey, let's put our $10 million in this stock market. That $10 million lost 30%. That $10 million lost $3 million. That $10 million turned into $7 million. They're getting scared. They're panicking. And we're seeing more and more companies laying people off. We're seeing companies in the mortgage industry. I'm seeing tech companies laying people off. Tesla CEO Elon Musk recently indicated that, he was concerned about the market, and he's laying off. He indicated that Tesla would be laying off roughly 10% of their employees. It's coming out, guys. It's coming out. So I want to share this information with you guys because I want you guys to be aware of what's coming down the pipeline. If you're carrying credit card debt, look toward paying those credit cards off, because you don't want to get hit with these. It's going to raise your household expenses. You and your family don't need to be hit with higher expenses. We're good. The gas pumps, the prices we're paying at the gas pumps, and the prices that we're paying at these grocery stores, they got us covered. We don't need to spend any more money there. So we certainly don't need to waste any more money paying these high credit card interest rates. We don't need that. Also, if you're carrying an adjustable rate mortgage on your home, if you're within the term, generally the adjustable rate mortgages have a locked-in interest rate of somewhere between 3 to 7 years. So if you're getting near that period of time where your interest rate could expire, I want you to strongly consider your options, because here's a big problem that can and will affect a lot of people. If you have a house with an adjustable rate mortgage, when that mortgage rate resets, and it's going to reset at some point, you're going to see your mortgage payment increase. And if it happens to increase at a point where the mortgage rates are, say, 6%, well, it's not going to jump to 6% overnight, but it's going to incrementally I don't know what your frequency is on your mortgage terms, but incrementally it will go up every so often. It might go up quarterly. It might go up every 6 months, but it's going to keep going up until it meets that current interest rate. Here's another thing. If you said to yourself, hey, I'm just going to refinance my home. If you think things are going to get worse, you might want to consider doing that now, because interest rates are going higher. So if you said to yourself, hey, my interest rate is very high, right, or my adjustable rate mortgage is going to reset soon, maybe I should refinance and lock in a rate before it goes even higher, if you think that's the case, right? Well, just think about it. There will be a point where interest rates may go so high that you can't get approved for a mortgage, because now the payment that this new mortgage would lock you into is outside of the scope of your debt to income ratio, and the banks might not even approve it. So this could be a new housing market bubble and ultimate housing market crash that a lot of people didn't see coming, especially since we've been seeing these interest rates going up on mortgages lately, and more people are signing up for these adjustable rate mortgages just because the interest rates available for adjustable rate mortgages were lower than a 30-year fixed rate mortgage or a 15-year fixed rate mortgage. So just so that people could afford to buy these homes at these drastically elevated, inflated asset prices, they're taking these lower interest rates, which is basically a bait rate, through these adjustable rate mortgages, and they're locking themselves in for 3, 5, 7 years. But once that time period runs out, these people are going to be surprised at the new they're going to be surprised at the new interest rate that the mortgage industry is going to be in, and their mortgage payments are going to start going up, and there's going to reach a point where people are not able to afford this new mortgage payment. People are going to have to start letting houses go. So I really hope it doesn't go there, but I'm just saying I could see this coming down the pipeline. I wanted to share this information with you guys, with my community, because I've been through 2008. It wasn't pretty, and I just want my community to be prepared and to prep so that you don't have to go through the pain that me and a lot of other people experienced during previous egregious recessions in the past. Anyway, if you guys have found value out of this video, drop your boy a like in the comments, or drop a like for the video. Also, leave me a comment. I would love to hear from you guys. Also, consider subscribing to the channel. I got way more information to share with you guys. Maybe I'll drop another video later today, but a lot more news to come, a lot more updates. I hope you guys are well. Prepare, share this information with your friends and family, and I'll see you guys on the next one.